Hello all, welcome you to the course on corporate laws and governance. In this video, we are going to look at the recommendations of Naresh Chandra Committee on corporate governance. Let's look at the reason for the formation of this committee by the Confederation of Indian Industries. Confederation of Indian Industries set up this particular committee under the chairmanship of Mr. Naresh Chandra in February 2009. We also have Mr. Uday Kotak, Dr. J.J. Irani as the members of this particular committee. The purpose of this committee being formed was that they wanted to make the corporate governance more more voluntary than a mandatory one. Somewhere down the line, the success of the implementation of the corporate governance lies in the fairness, in the involvement that the companies pursue the different laws of corporate governance. It is not about merely following the rules. It is about doing it with all involvement, and they need to show proactiveness in the implementation. So basically, this formation of this particular committee under Mr. Naresh Chandra was made mainly because of the different corporate debacles that happened all around the world. In US, we can see we had the downfall of Enron, WorldCom, Tyco, etc. And if you look at the reason for the debacle of these big corporate giants, were mainly due to the financial irregularities and the reporting of these financial irregularities to the shareholders. So somewhere down the line, involvement of the auditors was one of the reasons for all these hiccups. And even in India, if you look at it, the financial irregularities that had happened with Satyam, as a result of which there were many problems that happened to the shareholders. Not only Satyam scandal, we also had Harshad Mehta scandal. So these scandals were the reason for the formation of the committee under the chairmanship of Mr. Naresh Chandra by the CII. This particular task force had in mind the listed companies and the wholly owned subsidiary of all the listed companies while forming the non-mandatory rules. So basically, if you look at it, whatever recommendations that had been given by this particular committee were non-mandatory in nature, because they felt that the companies should voluntarily follow the codes of corporate governance, which is very, very important. So all these recommendations that had been given by Naresh Chandra Committee was non-mandatory in nature. Let's look at the structure of the report. This particular report has the recommendations for the board of directors, in which they have given recommendations to the non-executive and the independent directors, to the committees of the board, as well as they have given recommendations with respect to the related party transactions, which results in conflicts of interest. They have given recommendation to the auditors, and the coverage was about the independence of the auditors, rotation of the audit partners. The recommendations that had been given for the regulatory agencies are to do with the legal and the regulatory standards which the companies should be made to adhere to, and the effective and credible enforcement of all these rules by the regulatory bodies. The final set of recommendations were made for the external institutions, which covers the institutional investors as well as the media. Let's look at the recommendations that had been given for the board of directors. As I have already mentioned, it is all non-mandatory in nature. There were totally 10 recommendations that had been made for the board of directors. The first recommendation is to do with the nomination committee. This task force felt that every listed company should have a nomination committee. This nomination committee should consist of the non-executive directors. Majority of them should be the independent directors. The role of this nomination committee would be to look for the independent directors and the non-executive directors. They will have to identify the independent directors and the non-executive directors. These candidates should be evaluated, and they will have to make recommendation that so and so can be made as the independent directors and the non-executive directors. And the nomination committee should ensure that these independent directors and the non-executive directors are competent and they are qualified. But all these recommendations can be done based on the kind of directions that would be given by the board of directors. The nomination committee is also expected to design the process for evaluating the effectiveness of the performance of the executive directors, non-executive directors, independent directors. On the whole, they will have to come with parameters based on which the board of directors would be evaluated, so which ensures that the company performs well. The second set of recommendation is to do with the letter of appointment, which has to be given to the directors. Like any other executive directors and the top level management who receive appointment letters at the time of their appointment, these non-executive directors as well as the independent directors should receive the appointment letter from the board. This appointment letter should clearly mention what are all the expectations of the board from the non-executive directors and the independent directors. This appointment letter should mention what are all the different committees that the particular independent director or the non-executive director will represent. Like, are they part of this, if they are going to be part of the audit committee or the nomination committee, or for that matter remuneration committee. All these information should be given. This letter of appointment should talk about the fiduciary duties which the non-executive director or the independent director is expected to perform. It should also talk about the liabilities that would arise because of performing these fiduciary duties. The moment we talk about the liability, this letter should also talk about the way are these liabilities that arise out of the fiduciary duties covered by the director and manager's insurance, or whichever liabilities that are covered by the manager and director insurance, then it should be mentioned here. The appointment letter should also talk about the term of appointment of the directors, that is how long they would be serving their position. It should also talk about the code of ethics that the company wants the directors to follow. It should also talk about the remunerations. When we talk about remuneration, it is not only about the compensations that they would be receiving. It should also talk about the retirement package, if at all it is there, what and all they would be getting. It should also talk about the stock options. These informations should also be given in the appointment letter. This nomination committee should clearly say what and all they have performed during a particular financial year, like what are all their terms of appointment, what are all their powers, what are all the activities that they have performed. These informations should be disclosed to the shareholders. It should be given as a report. It will become a section in the report on corporate governance, which would appear in the annual report of the company. Let's look at the recommendation 3. The third recommendation of the task force for the board of directors is to do with the fixed contractual remuneration. If you look at it, the Companies Act does not talk about the fixed contractual remuneration. As per the Companies Act 1956, if we look at it, the remuneration that would be received by the directors would be variable in the nature, in the sense it would be linked to the net profit. So this task force felt that there would be an option for the companies to give the remuneration to the directors in the form of a fixed contractual remuneration. For this, the task force felt that the Companies Act to be amended. Whenever we talk about this fixed contractual remuneration, then the quantum of fixed contractual remuneration should vary depending on the size of the company, whether the company is a big one or a medium one or a small one. Accordingly, the fixed contractual remuneration ceiling should also differ. This is one of the recommendations. In case a company wants to continue with the existing system wherein the directors would be paid the remuneration which would be linked to the net profit of the company. Normally, if we look at the percentage that they would be receiving as remuneration, it would vary from 1% to 3% of the net profit. So, if the company wants to continue with this linking of the remuneration with the net profit, they can still do that. But this task force clearly mentioned that a company can either go for the fixed contractual remuneration, or they can go for the remuneration that is linked to the net profit of the company. A director cannot get both the fixed contractual remuneration as well as the remuneration that is linked to the net profit. Either of the two can be given, not both. One more thing that has to be mentioned here is the task force was okay with the limit that the company the Companies Act has specified with respect to the sitting fee that has to be given to the director, as well as the stock options that should be given to the director. So they did not give any recommendation to change the sitting fee as well as the stock option which would be given to the directors. So they are okay with that. Only recommendation which this task force has made with respect to the stock option was, in case a director resigns the job, the director, and in case the director is going to have the stock option, the director cannot exit from the stock option at least for a period of a year from the date of resigning from the job. For 1 year, they will have to hold the stock. Only after the completion of 1 year from the date of the resignation, they can go for selling the shares in the stock market. Until then, they will have to hold to it. Next, we move on to the fourth recommendation, which is to do with the structure of compensation to the non-executive directors. Whenever we talk about the structure of the compensation, first component that we have in the compensation is the fixed component. This particular task force has recommended that the fixed component should not be more than 30% of the total cash remuneration package which the non-executive director would be getting. In the case of variable component, a director should be made eligible for getting the variable component only if the director had attended minimum of 70% of the meetings that had been conducted during a financial year. But the director is eligible for the additional payments for acting as the chairman of the board or the audit committee or other committees like the remuneration committee, nomination committee, etc. They have to be compensated. They should also be paid the additional payment for serving as the member of various committees like the audit committee, nomination committee, remuneration committee, etc. Next, let's move on to the fifth recommendation, which is to do with the remuneration committee. This particular task force has specified that every listed company should go for a remuneration committee, and there should be a minimum of 3 members, and all the 3 members, or all the members for that matter, should be the non-executive director. Majority of them should be the independent directors. What is the role of this remuneration committee was that they have to set the remuneration for all the executive directors, executive chairman, as well as to the top level management, like the chief financial officer, the company secretary, etc. They will have to set the remuneration. When we talk about the remuneration, we talk about the stock options, the compensation package, the variable benefits which these executive directors, chairman, and the top level management would be getting. Of course, they can recommend and monitor the level and structure of pay for the senior management, which falls just below the board, as I mentioned, like the chief financial officer or the company secretary. They can definitely give the recommendation with respect to the structure and the level of pay. This again, just like how we looked at this nomination committee, even the remuneration committee should clearly mention what are all their terms of reference, what are all their powers, and what are all the authorities they had, and what are all the works they performed during a particular financial year. They will have to give a report on that, which will appear as a section in the report on corporate governance, which is part of the annual report of the company. So these details have to be divulged to the shareholders. The sixth recommendation is to do with the audit committee constitution. Again, every listed company should have an audit committee. There should be a minimum of 3 members. All the members should be non-executive director. Majority of them should be independent directors, which is important. Recommendation 7 is to do with the separation of the offices of chairman and the chief executive officer. Somewhere down the line, the chairman should not act as the chief executive officer, and chief executive officer cannot be the chairman. But if we look at the Indian companies, most of the Indian companies, if we look at it, the chief executive officer would be the promoters, or the founder member becomes the chief executive officer. While before this particular recommendation was made, the task force looked at the pros and cons of having or not going for the separation of the chairman and the chief executive officer, and finally they concluded that for better corporate governance, it is good to separate the offices of the chairman from the office of the chief executive officer. Recommendation 8 is to do with the board meetings through teleconferencing. Not all the directors would be available to attend the meeting. Whenever the director or the set of directors are unable to make to the meeting, they can always attend the meetings through teleconferencing or the video conferencing mode. Only thing that has to be taken into consideration is that they will have to minute it that so and so directors had attended the meeting through teleconferencing or the video conferencing, and the same had to be acknowledged or signed by the directors who have attended the meeting through teleconferencing, which will act as the proof of participation. Not only that, in that meeting, whatever decisions that had been made or any kind of resolutions that had been passed, all that had to be signed and confirmed by the director or the directors who have attended the meeting through teleconferencing. These two things should be taken care of whenever the directors meet or attend the meetings through video conferencing or teleconferencing and not in person. Now, let's look at the ninth recommendation. Ninth recommendation is to do with the executive sessions. In order to perform very effectively, the independent directors should be given all the right to meet among themselves without involving the management or without involving the other board of directors. What they can do is they can deliberate on the various issues that are there in the company. They can do this before they go for having the meeting with the board of directors. So they can go for as many executive sessions as they would like to have in order to give the best opinions or in order to make the best decisions in the board. So they can do that. Not only that, they can have meeting with the internal auditors as well as the external auditors, even for that matter the management, for anything which they feel that they need more information. Whatever decisions that are made by these independent directors, it should be data driven and they have to be provided with lots and lots of data. So whenever they feel like they need to have meeting with the internal auditors, external auditors or the management, they can hold the meeting, they can collect the information for making better decisions. The 10th recommendation is to do with the related party transactions. We all know related party transactions are to do with the conflict of interest. And let's see what are the recommendations that are there for these related party transactions. The audit committee plays a vital role with respect to this related party transactions. Whenever there are going to be any kind of related party transactions which are not in the ordinary course of business or which are not on arm's length basis, then or if there is going to be any amendment of such related party transactions, all these transactions have to be pre-approved by the audit committee. So it is they should ensure that, the company should ensure that whenever there are going to be any kind of related party transactions which are out of the ordinary, or which are not on arm's length basis, or which where they have made amendments, they have to get the approval from the audit committee before they proceed with those related party transactions. In case a particular related party transaction is not out of the ordinary, even then they not that they have to get the approval from the audit committee, but what they have to do is they will have to keep the audit committee informed, so that the audit committee can refer to these related party transactions whenever they want to. Next, next set of recommendations are for the auditors. Let us see the recommendations that the task force has given to the auditors. The 11th recommendation is to do with the auditor's revenue from the audit client. The auditor would be getting the revenue from different clients. They would be getting from a single client, or from a client and the subsidiaries of the client. A client would be a group company, and there would be different divisions of the particular client company. An audit firm may act as the auditor not only to the parent company or not only to the holding company, they may act as the auditor to the subsidiary companies. So when they are going to act as the auditor to the group of companies that belong to the same parent, then they should ensure that the revenue that they get from the group of companies does not exceed 10% of the total revenue which the audit firm would be making. Whenever we talk about this audit firm will not be the single audit firm. It could be a single audit firm, or this audit firm may have subsidiaries. So we have to take into consideration the total income that the audit firm as well as its subsidiary makes from the client company and its subsidiaries. It should not exceed 10% of the total revenue that the firm makes. In case it's going to exceed, then it should not be allowed. Next is to do with the certificate of independence. The 12th recommendation talks about the certificate of independence. This particular task force has recommended that the audit firm should get the certificate from the auditor certifying that the firm is independent and they are operating at arm's length with the client company. There are no personal interest between the client company and the audit company, and they have a very independent relationship and they act in arm's length basis. So this has to be ensured by, this should be in fact certified by the auditor that the audit firm is an independent entity from that of the client company. And they should also certify that the audit firm has not undertaken any prohibited non-audit assignments for the client company. Even this certification is needed. So the certificate of independence should be got by the audit firm from the auditor stating that they have an independent relationship with the client company. 13th recommendation is to do with the rotation of the audit partners. The audit firms should be rotated after every 6 years. In the sense, if a firm acts as the auditor for a particular company, they can act as the auditor only for a period of 6 years. After that, there should be a cooling period of 3 years. Only after the lapse of the 3 years, the same firm can be appointed as the auditor to the firm, not otherwise. Similarly, whichever team that actually engages with this audit firm within the company, this 50% of this audit engagement team should also be rotated every 6 years. The 14th recommendation is to do with the auditor's liability. First thing is that the task force has recommended that the firm which acts as the statutory auditor or the internal auditor to the company, they should disclose their net worth to the company that they operate as the auditor. So they have to disclose their net worth to the company to whom they act as the auditor. And each member of the audit firm is liable to an unlimited extent for any kind of lapses that happens because of them. So they're liable for any of their misdeeds. They would be made liable. In case the audit firm is going to be an unlimited liability, if it's not an unlimited liability company, if it's going to be a limited liability company, then the partners of the audit firm will have only limited liability to the extent of their paid in capital and the free and or undistributed reserves for the dereliction of their duties. In case, but the individual auditor who was actually responsible for the lapse in their duty, or for that matter dereliction in their duty, they will have unlimited liability. Even in the case of limited liability firm, the individual auditor who had been responsible for the dereliction of their duty, they will have unlimited liability, but the other partners of the firm will have limited liability to the extent of their paid in capital. The 15th recommendation is to do with the appointment of the auditors. The audit committee plays a very important role with respect to the appointment of the auditors. So the audit committee is expected to perform certain functions with respect to the appointment of the auditors. Once the auditors are appointed, what this audit committee expected to do is they'll have to have meeting with the auditors. They will have to discuss about the annual program, audit program that the audit firm has to perform, and the scope and the coverage of the audit plan should also be discussed. So this is one activity which the audit committee is expected to do. Not only that, they will have to check for the proof of the certificate of independence, because if the previous recommendation says the auditor has to get the certificate of independence, and here this audit committee has to examine and review the certificate that has certificate of independence. So they'll have to look at that. The next is that the audit committee has to make recommendation to the board for the appointment or the reappointment, or for that matter the removal of the statutory auditor. And they will have to give reasons why they want the statutory auditor to be appointed or reappointed, or for that matter be removed. Whenever they go for the appointment or the reappointment, they will have to come with the annual audit remuneration which they recommend to be given to the statutory auditor. The 16th recommendation is to do with the qualification in auditor's report. Here we talk about the languages that would be used by the auditor, the terms that would be used. Here what this task force felt was that the Institute of Corporate, the company, if you look at it, the task force has recommended that the Institute of Chartered Accountants of India should appoint a committee, and they will have to standardize the language or the different terms that can be used by the auditor in their report, in the annual report of the company. They are not supposed to use the languages that they are not allowed to use while preparing their report on the company, which would appear in the annual report. In case they are going to use those languages, terms, or when they go beyond their qualification while giving their report, then they will have to give explanation for such lapse in their usage of language. So this recommendation is to do with the Institute of Chartered Accountants of India. The task force felt that the Institute of Chartered Accountants of India should come out with the different terms and the languages which are permissible to the auditor while they are going to give their report in the annual report, so that it will ensure that they don't go beyond their qualification and the language which they are supposed to stick on to. In case there is going to be any lapse, then the audit firm is responsible for giving explanation for the lapse in the usage of language. 17th recommendation is to do with the institution of mechanism for whistleblowing. The task force felt that there should be a mechanism for whistleblowing to the employees whenever there are going to be any kind of unethical behavior, or it could be actual or it could be an suspected fraud by the employee, or whenever there is going to be violation of the company's code of conduct or ethics by any of the member of the executive or the management, then the employee should be given a mechanism through which they can report their concerns about all these unethical behavior, suspected fraud or violation of the company's code. So that should be there, it should be in place in the company. Whenever an employee blows the whistle, yes, what the whistleblower would normally, what happens, they would be victimized. This kind of victimization should not happen. The company should ensure that the employee who actually brings all these frauds and unethical behavior should be safeguarded. And these employees should be given access to the chairperson of the audit committee whenever it is needed. They should ensure that the employees are given access to the audit committee. The 18th recommendation is to do with the risk management. The board, audit committee, the executive management, all should work together, and they should identify what are all the risks that impact the business. Once they identify the risks that impact the business, they will have to document the process of identifying the risk. They will have to come out with strategies to minimize the risk. They will have to have risk optimization techniques, and they should and which actually becomes their a strategy, right? They will have to document it. They will have to come with strategies and plans for risk identification, risk minimization, as well as for risk optimization. And the board should ensure that the critical risk management framework is in place across the company, and they should also ensure that they look at this risk management framework, they evaluate it once in 6 months. The next set of recommendations are to do with the regulatory agencies. The 19th recommendation of the task force is about harmonization of the corporate governance standards. The regulatory bodies like the government, the Securities and Exchange Board of India, all these regulatory bodies should work together, and they should work together, and they should come out with common corporate governance standards which all the companies should follow. So that is one of the recommendations. The 20th recommendation is to do with the audit oversight mechanism. Here the task force has recommended that the government has to strengthen the Institute of Chartered Accountants of India's Quality Review Board, because they act as the audit oversight, and when they are going to perform their activity, their role as the audit oversight, then somewhere down the line their role has to be strengthened, and the government has to take an initiative in strengthening the ICAI's Quality Review Board. It should be, and they should, the government should ensure that the ICAI Quality Review Board could function, or they could function very effectively, and they could maintain quality in the audit process through their oversight mechanism. And it should be done like how it's all done in the United States of America, like that the Institute of Chartered Accountants of India should be given more power, and they should be their mechanism should be strengthened, so that the audit oversight mechanisms quality is improved. The 21st recommendation is to do with the effective and credible enforcement. Whenever there are going to be any kind of frauds, normally what happens, there would be different agencies, government agencies, who would be making an investigation of the particular fraud. We have the CBI, then we have SFIO. When there are going to be different government agencies who would be actually investigating any kind of fraud, the committee or the task force has recommended that these investigative agencies should work together. They should investigate it jointly rather than doing it separately. They should come together and work in tandem with one another. That was one of the recommendations. Another recommendation of the task force is that a task force should be constituted, and this task force would be in the sense, a task force would be involved in the investigation of any kind of fraudulent activities by any of the company. And this task force should be monitored, because they should be, in order to control this task force, the committee has Naresh Chandra's committee has recommended that a committee should be formed, which should be headed by the cabinet secretary, and they will oversee the appointment and the functioning of this task force. And they should also ensure that this task force works with the government departments and agencies. They should be supporting the government departments and agencies who are into the investigation of the fraudulent activities of the companies. Next is to do with the recovery for the act of misfeasance, malfeasance or non-feasance. It should be ensured that there is a civil recovery for any act of misfeasance or malfeasance or non-feasance from the wrongdoers. It should definitely be there. Not only that, there should be penalties and punishments, and these penalties and punishments should be adjudicated appropriately, in the sense there should not be any kind of conflict of opinion with respect to this adjudication, and all these cases should be disposed of between 6 to 12 months. This will result in effective and credible enforcement of the law on the wrongdoers. The 22nd recommendation is to do with the cancellation of fraudulent securities if a person is involved in any kind of the fraudulent activities with respect to the buying and selling of securities. Then it should be ensured that particular person all the securities that the particular person holds gets confiscated and it gets cancelled. The next recommendation is to do with the liability of the directors and employees in case the directors and employees are going to involve themselves in any kind of unjust enrichment, or they commit any offence with such intentions. Then they should be penalized for their activities, and it is more to do with personally they should be made liable for their offences. And whatever punishments that would be given to this wrongdoers, it should go with the extent or the gravity of the wrongful act that they have done. In addition to the disgorgement of wrongful gains, they should be punished, they should be penalized. The third recommendation was that the non-executive directors should not be made to undergo this tedious process of facing the investigations if there is going to be any offence of non-compliance with the statutory provisions, unless and until there is a prima facie that they were liable for such failure. Otherwise, the task force felt that the non-executive directors should not be made to undergo all the painful process of facing the investigation, unless and only when they should not be made to do that. They can be made to undergo all these rigorous process only when there is a proof that they were responsible for the non-compliance of any kind of statutory provisions. The last set of recommendations are to do with the external institutions. Recommendation 24 is to do with the shareholders' activism. What the task force felt was that the long-term investors, institutional investors, we talk about the fund, we talk about the insurance companies, the fund companies, who actually have to play a very active role in the in taking care of the interest of the shareholders. How they can be alert and they can protect the interest of the shareholders is that through their participation. They can have their nominee directors in the board of directors, and they can ensure that all the decisions that are taken are in the interest of the shareholders. They can do that, and they can also be very alert in their external proceedings for preventing any kind of mismanagement. And these long-term investors, institutional investors, what they can do is they have to be present in the general meeting. They will have to play an active role in the general meeting, and they will have to vote in the general meeting in such a manner that it protects the interest of the other shareholders and the stakeholders. Not only that, they will have to be proactive, and they will have to analyze and review the corporate actions. They will have to check whether the company is following all the corporate governance norms, and through their proactive participation, these institutional investors can definitely play a very, very important role in protecting the interest of the shareholders and the other stakeholders. The last recommendation that we have is to do with the media. The task force feels that somewhere down the line the media can be adopting different analytical methods. They can look into the legality of various aspects whenever they do the reporting. So when they are going to be very rigorous with respect to their financial analytics and legal rigor, automatically the quality of their investigation would go up, which will definitely protect the interest of the shareholders. So even media has a very important role to play in ensuring that the company follows all the corporate governance norm. One thing that has to be noted here is the recommendation of the Naresh Chandra committee is all non-mandatory in nature. These are all voluntary code that they have suggested, which the company can voluntarily follow in order to enhance the quality of their corporate governance. Thanks for listening.